Hello everyone and welcome to my weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, what we've had is this big G20 meeting that I think has had a profound impact on the markets on Monday morning and could potentially run up to actually through the next few weeks, actually, the impact that has been so significant to risk appetite. The markets have been fixated through 2018 on how the trade dispute between the US and China has been developing, and certainly the G20 meeting seemed to put that on hold, or an escalation, a further escalation in 2019, put that on hold for 3 months, 90 days. Certainly has meant that traders can start to look positively, I think, in the coming weeks. And we've seen equity markets rising strongly on the back of that. We also had a meeting between Russia and Saudi Arabia, between Vladimir Putin and Mohammed bin Salman, and they would suggest that the cooperation continues between Russia and Saudis on oil production. Sets us up nicely, I think, for the key event towards the end of this week, which is the OPEC meeting, considering how OPEC could potentially cut production levels in an attempt to put a decent floor underneath the oil price, which has been falling so precipitously in recent weeks. Again, another factor that has helped to improve market sentiment today. Now, how this all adds up is to potentially be a dollar corrective move. I think it's another driver. Certainly the impact of the trade dispute being put on hold is another sort of driving impact through dollar, which may be now losing its way on the upside now. So watch out for that. The dovish Fed is another factor there that we need to keep an eye on as well. But certainly this week we've got a lot of key data points to look out for. You've got the potential growth impacts of the PMI data. You look towards the end of the week and you've got the non-farm payrolls report as well. So lots to think about this week for traders. Now, what we have got is the FX markets, which are impacted by this dollar weakening that we've seen over the weekend. However, is it something that's going to now sustainably weaken the dollar? That's the big question that markets will be looking out for. Euro dollar, for example. Euro still remains hamstrung to an extent by the Italian budget dispute, but certainly I think there has been sort of signs of an improvement today. Euro dollar still stuck below 114, big figure, which is interesting. This morning, that's a level of resistance near term between 114 to 114.70, key overhead resistance that needs to be broken to drive a recovery. Now, in terms of Brexit and sterling, still remains the key issue for the direction of sterling near term. We've seen the likelihood growing in recent times that Theresa May is not going to get this deal through Parliament, and the potential for a humongous defeat actually in Parliament is now seemingly on the cards. So how does that impact on UK politics, impact on the uncertainty through sterling? Pulling cable lower this morning and likely to remain a drag on sterling in the near term. So what about dollar yen? Well, the risk appetite aspects of this G20 meeting certainly has been dollar negative, but also seemingly yen negative as well. Obviously, the yen being the safe haven trade that a lot of traders do go to in times of strife. So we've seen the dollar yen actually sort of hovering around, really, sort of fluctuating a little bit higher and lower, but ultimately seems to be still fairly stable. And the outlook for dollar yen, I think, could remain as one of medium-term uptrends are still intact. Whether the momentum indicators are suggesting the upside potentially is still there in the move, I think is becoming questionable. But I think dollar yen still remains positive in that regard. This week we're also looking out for the Reserve Bank of Australia and the Bank of Canada both giving monetary policy updates. So we'll see how the impact that will have on those respective currencies. In terms of indices, the big beneficiaries really of this G20 meeting have been the indices, sort of the S&P 500 opening sort of conceivably 1.5%, 2% higher on Monday. Similar moves on the European markets. We saw the Asian markets all strong overnight as well. So certainly it seems as though that the outcome of this G20 meeting has been definitely risk positive, equities positive. So we're looking at these markets moving higher. Is this an outlook changer? That is the question we need to see. We need to see some really strong moves on these markets. The DAX, for example, big overhead supply at 11,725. Coming into play. The FTSE 100, big overhead supply, 7,200. to 7,300. So these are levels that really do need to be broken through in order to generate the considered upside that we could well see in these equity markets, but still a little bit to go. And for commodities, well, the dollar positioning has been a key factor for gold, but also you see out the G20 meeting, gold not enormously higher because you've got the safe haven aspect of gold as well. Inflation remains questionable, which again means that we're seeing some mixed fundamentals for gold at the moment. 1236 is a key level to remain as a ceiling on gold near term. Big overhead supply there, big pivot needs to be broken. Now in terms of the oil price, clearly on Monday morning a positive signal has given the oil price a chance to recover. Big short covering potential there on the oil price, but certainly I think that we've seen the market moving higher. We could see that continuing in the coming days. OPEC at the end of this week certainly seems as though that the market is sort of positioning a little bit less negatively coming into the OPEC meeting now, following on from that meeting between Putin and Mohammed bin Salman. And how does that really affect on oil coming through in the at the latter stages of this week? It certainly looks as though a production cut is on the cards from the OPEC meeting, perhaps as much as 1.5 million barrels. I think that would be considered probably a positive outcome, certainly for the oil price, if that were to be seen. And the data points this week, well, manufacturing PMIs coming out on Monday, they seem to be a little bit ticking higher, interestingly, or higher than expected, although the Eurozone data continues to fall away. They actually were revised slightly higher from the prelim reading or the flash reading. Certainly the UK data was a small positive, really, in a pretty dark time still for the UK in terms of how sterling moves. Now, obviously, then we focus on the US data, which seemingly should remain pretty strong. And then moving further out this week, we've got the RBA on Tuesday. Then we're looking at, just checking down my list, services PMI Wednesday. OPEC is going to dominate Thursday, and then Friday, non-farm payrolls. So for payrolls report, as ever, we're looking for the average hourly earnings really to be the driver rather than the headline, which creates a bit of volatility, but markets tend to be focusing on the average hourly earnings now. So with that in mind, I wish you good luck in your trading across these markets, and I will speak to you again next time.